China's latest crisis? An economy built on debt, collapsing right before our eyes. For years, the world watched as China's unstoppable growth reshaped global markets. But now, the cracks have turned into fractures. Skyscrapers stand abandoned, factories are closing, millions of young workers, once promised a bright future, are stuck in an economy with no space for them. And the worst part? This isn't just China's problem, it's the world's. The real estate bubble has popped, youth unemployment is at an all-time high, and behind closed doors, China's government is scrambling to keep the economy from imploding. But can they stop the collapse? Or is this just the beginning of something even bigger? Let's break down how we got here, why China is in freefall, and what this means for the rest of the world. China's real estate boom wasn't just about housing, it was about power, prestige, and the belief that property values could only go up. For decades, the Chinese economy was built on one simple promise: real estate is the safest investment. Parents told their children, if you can buy property, you're set for life. Banks poured trillions into developers, and local governments fueled the frenzy, selling land to raise cash. And for a while, it worked. Entire cities rose from empty fields. High-rises, shopping malls, and luxury towers appeared overnight. Developers rushed to build, confident that demand would never dry up. Apartments sold before they were even finished. Families stretched their savings, convinced they'd struck gold. But behind the dazzling skyscrapers and record-breaking sales, a dangerous game was playing out. Because this wasn't just growth, it was a ticking time bomb of debt. At the centre of it all was Evergrande, the real estate empire that promised everything, but delivered disaster. This wasn't just a company building homes. Evergrande was everywhere. They dabbled in electric vehicles, theme parks, finance, healthcare, even soccer clubs. And they did it all the same way, borrowing money fast and cheap. For a while, the illusion held. But by 2021, their debt had exploded past $300 billion. Then, the unthinkable happened. They couldn't pay it back. According to Financial Times, Evergrande's collapse marks the biggest financial default China has ever seen. Construction stopped. Investors panicked. Families who had already paid for apartments were left with nothing but unfinished buildings. And Evergrande wasn't alone. Country Garden, Vanke, Sunac, the giants of China's real estate empire, soon found themselves drowning in the same crisis. What was once an unstoppable boom had turned into a full-blown collapse. Want to see the impact of this crisis? Look at China's ghost cities. Towering skyscrapers without a single resident. Shopping malls that have never seen a single customer. Entire districts built for millions of people, now completely deserted. According to Bloomberg Economics, China has the equivalent of 60 million unsold apartments, which will take more than 4 years to sell without government aid. It's not just a few empty buildings, it's an entire country's economy frozen in place. The bubble didn't just pop, it left behind an economic wasteland. Developers built more than China needed, more homes than buyers, more debt than the economy could handle. And now, there's no easy way out. China's leadership knew the real estate market was spiraling out of control, so in 2020 they stepped in. They introduced the 3 red lines policy, new rules that stopped developers from borrowing beyond their means. But instead of slowing the market down, it brought everything to a screeching halt. Developers who needed loans to finish projects suddenly found the doors closed. Construction stopped. Workers were laid off. Banks that depended on real estate loans saw their balance sheets crumble. As The Economist reported, the crackdown on borrowing has turned a slow real estate downturn into a full-blown crisis. And the worst part, local governments, which depended on land sales for revenue, started running out of money. Because the real estate market wasn't just one sector of the Chinese economy, it was the engine driving everything. And now, that engine is failing. Some investors are betting on a recovery. Home prices in some cities are creeping back up. The Chinese government is trying to stabilize the crisis. But this isn't just a housing problem. It's an economic crisis that threatens banks, local governments, and millions of people. So the real question isn't just how bad this will get. It's whether China's economy can survive it. According to Bloomberg Economics, without structural reforms, China's property sector may never return to its former strength. Imagine this. You spend years studying, chasing a degree that was supposed to guarantee success. Your parents sacrificed, your teachers encouraged you, society told you, work hard and you'll have a future. But what happens when the future isn't hiring? For millions of young Chinese graduates, that nightmare is real. By June 2023, youth unemployment in China hit a record 21.3%, a staggering number that left millions stranded without job prospects. No interviews, no callbacks, no opportunities. For many, the relentless grind of resume submissions and rejections led to one inevitable conclusion. Why keep trying if there's nothing left to try for? And so, a movement was born. Disillusioned by a system that promised prosperity but delivered uncertainty, many young people stopped playing the game altogether. Instead of exhausting themselves in an economy that no longer had space for them, they embraced lying flat, or tangping, a philosophy that encourages stepping back from societal pressures and rejecting the traditional rat race. According to the Goethe Institute, one reason why official channels label the lie flat movement as such a negative one is because it goes against the ideals of the Chinese dream. In other words, the government sees it as a threat, a rebellion not in the streets, but in silence. Because a disengaged workforce isn't just an economic problem, it's a societal shift. This isn't just personal disillusionment, this is a massive economic shift. With a significant portion of young professionals opting out of the workforce, entire industries are feeling the strain. Retail is slowing, technology firms are struggling, consumer spending is dropping. And the problem isn't just too few jobs, it's also too many graduates. As the Wall Street Journal explains, over the past 20 years, a surge in higher education across the developing world has led to an abundance of graduates, many of whom remain jobless and disillusioned. The higher the number of unemployed graduates, the more fragile China's economy becomes. Economist Yasheng Huang from MIT puts it bluntly. Without meaningful economic reforms, China may struggle to provide opportunities for its youth. And without those opportunities, the country risks losing an entire generation, not just in numbers, but in innovation, ambition, and progress. The lying flat movement isn't just a protest, it's a warning. Because when an entire generation stops believing in the system, the real question isn't just about unemployment anymore. It's about whether China's economy can survive without them. Beyond the visible crises lies a concealed threat: China's burgeoning hidden debt. Local governments have amassed over $10 trillion in liabilities, much of it obscured within shadow banking systems. These clandestine loans have financed vast infrastructure projects, many of which fail to generate sufficient revenue. The Rand Corporation cautions, China's mounting local government debt could lead to an economic spiral. As repayment deadlines loom, the risk of defaults and bank failures intensifies, potentially triggering a financial maelstrom that could engulf the entire economy. China's leadership stands at a crossroads: how to rectify an economy ensnared in debt without dismantling its foundations. Efforts have included bailouts, stimulus packages, and stringent regulations. Yet, these measures have yet to halt the economic hemorrhaging. The path forward is fraught with complexity, and the stakes are monumental. Some analysts posit that China might stabilize by pivoting from real estate to high-tech industries. Conversely, others foresee this as merely the onset of a prolonged downturn, potentially spanning years or even decades. The unfolding situation remains fluid, and the global community watches with bated breath as China navigates these turbulent economic waters. China's economic rise has been one of the most remarkable transformations in human history. A country that was once struggling to modernize became the factory of the world, the second largest economy, and a global superpower in just a few decades. But now, the same system that fueled its rise is starting to crack. The collapse of the real estate bubble, the wave of unemployed young professionals, the mounting debt crisis, these aren't isolated problems. They are symptoms of something much larger, a system built on breakneck growth now facing the consequences of its own momentum. And the world is watching. A slowing China affects global trade and investment strategies, creating market uncertainty, according to The Economist. The key question now isn't just how China will respond, but whether the system itself can be saved. If China can pivot, if it can move away from debt-fueled growth and towards real economic reform, it might avoid a full-scale collapse. But reforms take time, and time isn't something China has in abundance, because right now, investors are pulling out. Global markets are bracing for impact, and the companies that once relied on China's economic strength are looking for alternatives. In the past, China has defied expectations. It has survived crises before, but this time feels different. There are three possible futures. 1. China finds a way to stabilize, just as it has before, using government bailouts, tighter controls, and policy shifts to prevent a total collapse. 2. This crisis is just beginning, and the next few years bring more defaults, more job losses, and an economy struggling to find a new path forward. Or 3. This isn't just an economic downturn, it's a turning point in history, one that could reshape the balance of power, not just for China, but for the entire world. And that leaves one final question. We know that economic empires don't last forever. The world has seen countless superpowers rise, dominate, and then fade away. So, is this just a setback? Or is this the moment the world finally sees the limits of China's economic miracle? Let us know what you think in the comments. Because one thing is for certain, the story isn't over yet.